Welcome, y'all. So today, what we're going to be talking about is health insurance, and in particular, the Affordable Care Act and subsidies, and how that works, and why it may be a good choice for you. A lot of times, what I'm running into right now, our clients are going without insurance, or they think that they won't be able to afford it, or they didn't even know that insurance was available to them outside of work. A lot of people still aren't familiar with how the marketplace works. So we'll talk a little bit about those things, but we're gonna mainly focus on the subsidy itself. If you like these videos, find them informative, make sure that you subscribe, ring the notification bell. It gets us in front of more people. And trying to get as much knowledge out there as we possibly can is good for everyone. So when we're looking at the Affordable Care Act plans, some call it Obamacare, but really all it is it's government funded plan, and it allows people to get onto plans that have guarantees on them. So to go back a little bit, the way that insurance worked prior to this, and I was actually offering insurance way before this. I've been in the industry for about 17, 18 years. So the way it used to work was everybody had to go through underwriting if you didn't have insurance through your job. If you had anything major in your health history, you would get declined and not be able to get insurance, or have to go on the exchange, and it would be really, really expensive, one of the state exchanges. So you have the federal exchange, which is basically where you're getting insurance now through the Affordable Care Act. But prior to that, it was up to the states to make those decisions. Now, you could be overweight, have high cholesterol, high blood pressure, and because of that get declined, or if you smoked, you're almost a guaranteed decline. So what happened was, they, with the marketplace, made it so that everybody would have to get approved. Now, because of that, of course, they had to bring on a lot of people with illnesses already that normally wouldn't be able to get insurance if they didn't have it through their job. And to offset that, what happened is they offered subsidies for those under a certain level of income. Now, there's a couple of things that are going to make this different than Medicaid. So Medicaid really is based off of how much income you have coming in on a month-to-month basis, and then how many children or dependents that you have. Because of that, and because it's set so that you have to be under the poverty level more or less to qualify for it in most cases, a lot of people don't qualify for that, and sometimes even business owners who have incomes that go up and down. Real estate agents will see this a lot with, where their income's constantly up and down. They won't qualify for Medicaid because over the course of the year they do make quite a bit, or on certain months they do have higher incomes than others, and because they have to keep reporting that, they're not able to qualify. Now, with the Affordable Care Act, sometimes you can still get free insurance because of the subsidy. So what happens is, we look at how many people are in your household, how many are applying for health care, and what's the overall household income. Now, where a lot of people make a mistake is they're going to say what their gross income is, and that's not necessarily what they're looking for. What we're looking for is your taxable income, your adjusted gross income, or your line 11 on your taxes. At the time of this video, it was the line 11. And so what that does is, what we look for is, what's your actual income that the government counts, because the lower that is, the higher your subsidy is going to be. So what you're going to want to do is, if you're working on your application on your own, or you're working with a broker or agent, what you're going to want to do is let them know the lowest number that is, because that'll give you the highest subsidy. Now, what's going to also happen though, and you have to keep in mind, is if your income changes, for instance, if you start making considerably more money, you need to let someone know, either call the exchange or call your broker or your agent, and let them know to make those adjustments. Otherwise, you're going to owe more in taxes at the end of the year. On the opposite side of things, if you make considerably less money, let's say you're paying $100 a month for your insurance for you and your family, your wife loses her job, so now your income is going to drop by a few $1,000s. You also need to let them know that, because it's very likely that now your insurance would be free, because all the subsidy is really doing is giving you the tax credit up front. And so what would end up happening is, if you just leave it as is, let's say you say, you know what, it's not a big deal, I can still pay the $100. At the end of the year, you'd have more of a tax credit, and you would get more back in taxes if you are getting a refund, and you would pay less in taxes if you owe, because it's a credit. So that's the way the subsidies work. It's going to be really good for people if your adjusted gross income is really low because you're a business owner and you have a lot of deductions and things like that. It may be a good way to go. Also, for those that were recently kicked off Medicaid, you need to get with a broker or an agent and see what plan's going to work best for you and your family, because a lot of times you will qualify for that at that time. If you do have any more questions, want to talk to me directly about this and want me to look into things for you, by all means, click the link below. It'll be a free consultation. We'll see if it makes sense for us to work together. On that note, have a great rest of your day. Have a great rest of your week, and look forward to working with you.